Today, I want to talk to you about, with my strategy, how I'm choosing stocks or what I think is the best stock to buy for my strategy, and how simple I try and break it down to make it an easy process. Um, in my, ironically enough, in my previous video that was related to my investment challenge, talking about how my strategy is actually put in place and how it's been working. I haven't been following this very well. So there is obviously a theoretical, if you do this, it will work. And if you decide you're going to wing it and do something else, it's not going to work so well. So the whole point to that is create a strategy, create a plan, create a goal, stick to it in a way that is kind of somewhat of a commitment. Don't just be winging it, because in the end, that's probably going to turn around and bite you. Okay, so where are we at? Well, I originally, when I started looking for stocks, I had no idea where to look. So if that sounds like you, then I was there. I had no idea what stocks to look for. But I didn't know really what strategy I was doing. And then I kind of got into trading options. Then I thought I was going to do day trading. Then I thought, oh, I don't know if I want to do any of that, but I want to grow faster than if I'm just doing passively investing the same way you would in a mutual fund at your bank. So I wanted more than what a mutual fund could give me, but I didn't have the time or ability to kind of go into day trading, because at that point, I didn't know enough about it, and the time that they invest into finding stocks, so much more. And so then I went, well, okay, what's my risk aversity? Well, essentially, I wasn't as risk averse as I sometimes thought I was. So therefore, I needed something that was a little bit more secure. But security is, it's kind of like one of those illusions that, makes everything look like it's good, but then, yeah, in the end, it's not one of those um, really positives. So there is no such thing as not having risk. There's no such thing as security. Um, I mean, when you're trading, right? If you go to your bank and say, I want a GIC, yes, but they might give you just slightly above what inflation is, and inflation goes higher, you're stuck with whatever they give you. We'll get into that on a totally different basis. So I realized that I wanted to have stocks that were as close to secure as possible. So I was looking for blue chip stocks that were like, considered uh, kind of immovable. They were like they were the stock that would outlast, basically the end of the world kind of thing. They were so good. They were secure. And again, of course, their prices go up and down like any other stock. But in most circumstances, they come out of those circumstances looking good or looking better than they did before. And even if in their industry there's issues within their industry, they're still outperforming other stocks. Okay, so um, I guess, in Canada, the thing would be the big banks. There's the five big banks who typically are always performing well. Smaller banks really try to emulate a bigger bank in certain ways, because they kind of continue to grow. They keep shooting up profit. So um, now, I'm not an advisor, so I'm not telling you to go out and buy banks. So if you need advice, please go see an advisor. This is not advice. This is just how I approach buying stocks. Now, they always talk about diversity, and then if you have come across Warren Buffett in any videos where he talked about diversity, he thinks diversity is total BS. Now, the reason I think he believes it is diversity is not worthwhile is because he thinks you find a good stock that you think is going to do a certain amount of gain, and you put all your money into it. Because of the research you did, you should be right in, most cases, and then you take your profit when it gets to the point where you think it's maxed out or close to maxed out. So he's become a billionaire doing that. But I realize I don't have the time for that. And so when I'm choosing a stock, I may not always 100% predict which stocks are going to move up and which ones are going to move down, and what events are going to have what effects on all the different stocks. So I don't necessarily go after a stock that, I don't know anything about, But on the other hand, I may not know as much about a stock as someone like Warren Buffett would know about the things he's buying. So back to that whole thing is, I know the big banks typically are going well. I haven't bought a big bank stock since TD dipped back at the beginning of 2025. And in Canada, it dipped, even though the issue that came up was actually on the American side of the border with TD. And I felt like TD was going to bounce back from that. And it went lower than I thought it would, but I hung on to it. And so I do have an investment challenge account where I'm buying and selling with 1% gains. But in my TFSA, the TFSA is my hold account. So I bought it and held it, and it went up like 70%, I think, from where I bought it. It's been fluctuating ever since. But I hadn't actually bought any TD stocks until then, that big crash, and it worked out really well. And that's the type of thing where I felt like it would go well, and I could have put more money into it. And if I had, I would have got a bigger gain out of it. But on the other hand, I also bought some other stocks that had dipped, and they also did well. So how do I pick these stocks? Well, first of all, I'm looking for an aristocrat stock. So typically it's consistently had gains over a longer period of time. So it might have down periods like the TD stock did, I just mentioned. But over a period of time, like 20 years, TD is on an upward trend. TD also pays out a consistent dividend, as do most banks. And any other stock that I'm looking for consistent dividends, and I'm looking for increases in dividends. So not only is the stock price going up over time, the dividend payout is going up over time, and that is usually important because I'm looking for stocks that can do that because, well, they're good stocks. Now, you might be thinking, well, that's easy, I'll just go for the 5 big banks. Well, the problem now is all the banks are up, and there's lots of crisis going on in the world, and there's lots of people talking about either a recession or even, a depression, which, I mean, I don't want to throw the word out just because, but there's some people saying that we're looking at like the 1930s again, or the late 1920s, where the stock market crashed. Well, we've dealt with that over many different times since then, and the stock market's recovered. But are the big banks so high that they will come down again? I'm not willing to take that chance that they won't come down. So while they're high, I'm not buying them. And that's part of my strategy, is I'm looking for stocks that are those type of stocks, aristocrats, but they've gone from a high down to a low, and that's where I bought TD last in 2025 in the spring. So I was able to buy this stock at a very low price, and then I can hang on to it. Or what I did in my investment account is I bought and sold it several times, and as it climbed, I'd buy it when it dipped again, and then I'd sell it when it went back up. So the TD stock was very good to me on both of my accounts, one where I hold and one where I buy and sell. And these types of movements are good. Now, I didn't want to just be in one industry, so the stocks I'm holding on to are diverse, even though Warren Buffett would say diversification is no good. But for people like me who don't have the amount of time to really do the deep dive research that he would, and have a team of hundreds or thousands, I don't know how many people they employ, but they have a team to go out and research these stocks that they're going to buy and find out everything about them. For me, it's I find out as much as I can. I have some indicators, some statistics, and then I follow trends as well. If a stock regularly dips and it's down to a certain level, I'm going to probably buy in somewhere in that level where it's dipped before, or if it looks like it's kind of like going down and then up a little bit more than it was before, and then not quite as far down, I'd buy once it had that major dip. And if it looks like it's trajecting up, I kind of just always buy on the downside and try and hit it close to the bottom as possible. And where I have been failing is I'm buying too soon when it goes down. Fortunately, I do try and buy stocks that have dipped past the previous high. So once they're well past the previous high, that means that there's 2 peaks that it's reached. that I'm now below. So I feel like a stock there has more options. So this is more of a trending type thing than it is a statistical. But when I see trends happening with stocks, um, there are the professional buyers who are trying to, I guess, find that level where this stock fits in. Do they believe there's more value in this stock? Do they believe there's less value? And so when it gets too much value, it kind of comes crashing down. When it gets too low, all of a sudden people see that it has some extra value, starts buying in. And of course, all the people in between who are buying and selling, like myself, or people maybe even with more experience, are buying and selling in those ups and downs. That's another thing I'm looking for. I'm looking for that dip. Where's that dip coming from? Now, I'm only doing dividend stocks and aristocrat stocks, and what I'm doing to find those stocks is I'm doing Google searches. I use AI, ChatGPT, and they tell me what are the top stocks in each industry for those stocks, and I research those. So then once I have those, I can now research the stats. Is that stock price higher or lower than what the perceived value of that stock is? So I can go and take out all the different stats that I want to, and I can check that. There's certain things that I key in on when I'm buying and selling, but when I make my list, I do a little bit more thorough check. And of course, stocks that are more likely to be around for a long time, I keep. Now, here's an example of a stock that was an aristocrat, but recently kind of fell from favor, and it was BCE. And when I did the research, BCE is a great stock. It's this, that, and the other thing. But in my research, I found out that their cash flow was insufficient for what their payments and everything that was being spent, including their dividend payment. And eventually, they were going to run out of money, and they did. And so they sold a company, and they also turned around and lowered their dividend. So they had less money going out, and so anybody who had bought the stock before, stock price dropped, dividend dropped, and now you're sitting there holding this soggy tomato instead of thinking that you've got a nice ripe one. It's not so ripe anymore. And that's the things you want to watch out for when you're making your list. Is this a healthy stock? Is it not a healthy stock? It did have all of the trimmings that made it look like it was exactly what you wanted. It was dressed up nice. It had a good history, and with that little extra research about the stats, I was able to kind of steer away from it. Now, when it went down, I did buy in and buy some. I was able to sell it off, and then it went down some more, and I was lucky enough that I bought it near the low each time, and then it started recovering. So I did get some buys and sells on that stock. Now, where it is exactly at this point, I can't tell you. I haven't been buying into it, and when stocks are usually climbing, I'm not doing it. When my stock list is green, I'm usually not too interested. Certain stocks that I'll see dropping and dropping and dropping, 1% a day, 2% a day, 0.5% a day, 4% a day, I start taking notice, and I see them over and over. I start looking, where are they? And once they kind of flatten out, that is the key. Where I've gotten caught is they drop a big amount, like 4%, but they're probably 10% overpriced. That's not enough, and they're going to continue dropping once they start going, well, in my experience. So I try and stay away from those stocks. They might be on my list, but doesn't mean I'm going to buy them. So I can have a long list of stocks that meet my criteria. Doesn't mean I'm going to buy them. BCE is still on my list, but I'm a little bit more wary of it, and it hasn't come up on my radar for a purchase for a long time, and I don't hold any anymore. So I was able to buy and sell it, and it worked out. Mostly because I had it on my list. When it started dropping, I paid attention to the drops, and when I decided to buy, I wasn't what they call trying to catch the falling knife. It had already plateaued, and then I bought it. It went up again, sold it, went back down, bought it, sold it, bought it, sold it, and I made sure that I had that leeway. Whereas recently I've been buying stocks again while they're still dropping, and that is too dangerous. I got to stop doing that. It's gonna wreck my chances. Now, the stocks that I'm holding pay dividends. So if you end up holding a stock and you're doing dividend stocks, you still get the dividend. There's still stocks that I'm willing to hold for a long period of time, so it's all good. Now, that is all a huge part of my strategy, but picking stocks is, I think, one of the hardest things. They're easy to find if you just do your searches, know what your strategy is. And I'm going to talk a little bit more next time about choosing your strategy or having a plan that helps you pick your stocks. So I hope you tune in next time. I do have a link down below if you're looking for a broker. I use WealthSimple. I only mention it because I use them. I like them. Simple to use. They don't have a ton of bells and whistles on the free part, but I use them because I get free trades. I'll see you next time.